welcome back to Capital 10X. Today, we're very pleased to have Kim Rivers, the CEO of Trulieve, with us. Hi, Kim. How are you?
Hey, I'm great. How are you?
Oh, excellent, excellent, excellent. So we just wanted to just basically speak with you about some of the exciting things that are happening with Trulieve. So first of all, congratulations on your entry into the medical cannabis market with Pennsylvania.
Thank you.
Yes, and why Pennsylvania? Like, what was the main things that attracted you about Pennsylvania? What's so special about Pennsylvania?
Yeah, we think Pennsylvania is a fantastic market, and we've actually had our eye on Pennsylvania for quite some time. For those of you who have been following Trulieve, we've been talking about the development of hubs, strategic hubs around the country, and the Northeast being a place that we've got focus on with our Massachusetts and also our Connecticut markets there. So Pennsylvania was a natural fit for us. And, one, it's got a fantastic, obviously, population base. It's the fifth largest state in the country. And their medical program has just really taken off. They have over 300,000 medical patients already, which, to compare to Florida, Florida has just hit the 400,000 mark. So a very robust market, but still room for folks to really take a more prevalent position there. So not a clear, market leader there yet. And so we felt like there was room for us to really come in and make our mark and establish our brand in that Pennsylvania market. Not to mention the fact that we believe that we've got just two fantastic operating partners. So we're always looking at, the partnership side of acquisitions and making sure that it's a bandwidth expander for us. And so with both the team at PurePenn and the team at Solevo, who obviously are also committed to the business, and we did the deal via an earnout structure. And so that earnout is based on EBITDA and EBITDA multiple. And so when you look at the economics of the deal, we feel like it was very attractive from an accretion standpoint to our investors, as well as a future growth perspective. So we did the deals. They're valued at about 4.5 times EBITDA. And so just very excited on a number of fronts. And then of course you've got the hopes that the adult use or recreational market will come to pass in Pennsylvania here relatively soon as well. So lots of growth ahead and some fantastic companies that we're proud to be partners with.
Yes, yes. So, in speaking on that, PurePenn and Solevo were the right pieces at this time to drive that growth. Speaking of growth as well, you're currently in 5 different states. So, are you looking? Is that enough growth for your current situation, or are you looking maybe to expand geographically some more in the near term?
So, as we've said, we're very opportunistic when it comes to expansion, and particularly strategically, again, as we think about developing those hubs and getting, opportunities and really, scale in those hub markets. And so, I would just say that continues, right? I think we've been pretty consistent with respect to our outlook on growth. Also keep in mind that we have a number of organic growth initiatives underway as well. So we do have, of course, an ever expanding. We actually opened a store today in Florida, down south, and so we're continuously updating our footprint in Florida and expanding in Florida, as well as in our other markets. We've got inspections lined up in Massachusetts that will be coming online next year, and then of course are very much, as I mentioned, bullish on Pennsylvania and building our footprint there as well. So organic growth. I should also mention that we have an applications team that's very active, along with, of course, being opportunistic on additional expansion on new markets outside of our footprint that we have currently.
Yes, and speaking as well on your geographic footprint, so are we putting the majority of our working capital in one particular state? So are we going to continue the focus with Massachusetts, or are we more, I guess, leaning towards Pennsylvania to put our working capital towards as the new growth opportunities expand?
Sure. So, each market has its own, CapEx plans and growth trajectory for that and allocation for that market. And so as a reminder, Massachusetts, our cultivation and production facility there, 140,000 square feet, that's been financed through a sale leaseback. So that's already essentially, the capital's been allocated for that growth. We do, of course, have additional, smallish CapEx spend in Massachusetts on retail and so forth, and are looking for those key, retail components in Massachusetts. So again, very focused on making sure that we have the right locations and the right mix in Massachusetts. Pennsylvania, the current footprint on the grow and cultivation side is, 35,000 growing to 90,000 square feet. That's already also funded. And we expect that to be completed in the very beginning of 2021. Additional expansion opportunity though on that site and with that group, and so we're excited about being able to again fully expand and capitalize on that opportunity. But again, and then of course Florida will continue according to our previously announced CapEx plans in the state of Florida. We'll continue to build stores and continue to build cultivation and production capacity to keep up with demand, because access to medicine is very, very important to us, really across all of the states that we operate in, but of course in Florida as well.
Right. And speaking about the markets that you're currently in, you both have, you have holdings on the rec side as well as the medical side. So what's more attractive to you, at least in the near term? Where are you more focused on? If there is a particular one you're more
Yeah, I mean, that's a really interesting question that we could probably have like a very robust philosophical conversation around because, in our experience, and of course, we've cut our teeth in Florida, and it's been a fantastic market. It's medical. However, I would say that, we have over 500 SKUs that we offer in our Florida stores, and they range all the way from very specifically formulated, Delta 8 ratio products, or a seizure and nasal spray product, which are very medically based, all the way to our high-end concentrates with shatter and crumble and the waxes and so forth. And so really the product variety doesn't necessarily change. And I would tell you that I'm one, and I'm an advocate for this premise that we only in America do we say that medicine has to be in a certain category that doesn't make you feel good, right? Or, you know what I mean? And so I see a lot of crossover, honestly. And then on the rec side too, right? I mean, if you're a recreational patient, yes, you may be buying something, for a Friday or a Saturday night, but you also may be buying something to help you, focus during the day, or you may be buying something to help you sleep at night. And so I think so for me, I would just say that while there are certainly differences at the edges, I think the broad base, there's a lot of crossover. And so, I think that for us, we're focused on all of it, quite frankly. We want to make sure that our brand has segmentation and can speak appropriately to each different segment of consumers.
Right. So even within the demographic that you have, there may be some crossover with both of the sides. So you're continuing to blend both.
That's right.
Okay. And I wanted to ask you a question as well about, basically getting down to brass tacks, because that's what our viewers like. So you have the highest return on equity in the cannabis market. So can you just give our investors a bit of a greater expansion or an idea on what some of the key drivers of growth for Trulieve are in terms of your financial success thus far?
Sure. I mean, I think that, we are certainly known as a company that has been very focused on being, financially disciplined from the beginning. We also have been a company that has been focused on building brand and building loyal customers and repeat customers, and that therefore leads to, a higher, I would say, EBITDA margin and rate of return. Internally, we do hold every dollar accountable. As one of the largest shareholders in the company and a founder, it's very important to me that I know that we're growing the company the right way, and that we are, generating a return on dollars, and that we have very specific plans for raised capital and or invested capital. And so, I think that may be a bit of a differentiator, and that we definitely did not approach this industry as a grow at all costs and hope that the bottom line catches up with the top line at some point. We've really grown it with an eye on that bottom line, just simply because in this industry, right, which has some volatility to it, we just thought that it was the responsible and right way to build a company that has long-term shareholder return. And so, really, I think just it's a bit of a philosophical difference, and that we've been very intentional in our growth and very intentional in how we grow the company to make sure that we keep an eye again on that brand equity, which leads itself and lends itself to increased customer loyalty and repeat customers. So our loyalty score is at 76%. That's something we're very proud of, and it's something that we track very specifically. And I think that we're excited to continue to build our brand inside and outside of Florida, and really looking forward to the incredible trajectory that we know that our company has.
Oh, okay, excellent, excellent. Well, yeah, that's definitely a question that we wanted to get past to our viewers and our investors as well, because that's one of the main focuses here we have at Capital 10X. And yeah, that was definitely excellent. Yeah, and thank you very much for joining us.
Oh no, thanks so much for having me. Appreciate you guys.